forward. This is what we would call the banker bet on oil. And you can see how big a discount we've got on this to buy into this narrative here, and especially this one here. This is crazy good. Well, it set up a little bit of an overbaked trade here. You can see that. It set up an overbaked trade here, but it also gave us another opportunity to do exactly the opposite and get back straight back in again, guys. Straight back in the riding seat right there. You see it? It's pretty obvious. Now, obviously, as that's driven a lot higher here, and for me, this isn't a sell trade, but it's definitely an opportunity because of the speed that the purple line drove higher at. But it's definitely an opportunity to book. I mean, it's crystal clear it's an opportunity to book. So what is those trades? It's a sell, a sell, a sell, and a sell, and a buy trade. So I'm going to sell oil here, lower low. I'm going to sell oil here, lower low. I'm going to sell oil here, lower low. I'm going to take profits here, and I'm going to sell oil here. And I'm going to close out my trade by taking profits here. Crystal clear. And if you look at those on the oil charts, you'll see where the trade shows up. You'll see that there was a sell oil here, which we got. There was a sell oil here, which gave us something in a scratch. And then there was a sell oil here, taking profits. And then there was a last sell oil here for that very, very large swing. And then there was a profit take here. It's amazing. I know a few of you guys were trading this today, so hopefully you've managed to bag that $1,000 move on oil. It's very, very obvious, very clear. No questions about the trade itself. And what else could we add to this? Well, obviously the idea of adding the crack spread itself makes sense. And it should be that the blue should always be at a premium to the purple, which gives us an idea that the red line is going to be in the right side at the right time. Well, the blue is quite clearly at a premium to the purple, which is quite clearly at a premium to the red. What else could we add? We could add the inflation break-evens. And the inflation break-evens was a bit of a challenge at first, but then turned just at the perfect time for that sell to come in. Just at the absolute perfect time right there. And it absolutely killed it. Now, when it came to the retest, we were starting to see the break-evens diverging, giving us at least enough confidence to take the market off those levels. It is a brilliant narrative, guys. Absolutely world-class narrative. If you can't make money on the crack spread skew, guys, you're probably going to struggle to make money on anything. It's a very, very powerful piece of information. Who sold the top lines on gold off the 1800 break? Anybody? I'm assuming everybody that trades gold was looking for that 18 handle. There was a big paycheck right above it, coming off the prior swing at 99.5, and then we got another swing coming off the 98s, 99s, and it gave a very, very strong case. Remember, we talked about needing to take out that 96 guy, that algorithm buyer. Well, we couldn't take out the algorithm buyer, but we simply started to establish the fact that there was probably a top edge sell. And then we did take out an algorithmic buyer. You can see this little Momo buyer came in here. They get busted, didn't they? So we got a little Momo algorithm just in here. And you can see what happened to that Momo algorithm buyer there. They got absolutely busted. They get toasted right there. And that gave this BSG squeeze type idea of a top line. And there's the commercial coming in. There's the buyer getting jammed, and then all of a sudden, the break of that opens the door to the sell side. Now, obviously, it would be ideal once that breaks as if we get a 0 point up here, but that sometimes doesn't happen. It's the break of the red line that we're always watching. We said that in the classrooms in the article that I wrote at the weekend, is that when we break that red line, as we would have at this red line, when we break that red line, it changes the story. The algorithms are switching off. And as a result, you can see a commercial buyer came in at lower prices. It's not actually a commercial buyer. It's just the price action. Remember, this is not actually a commercial buy. It's just the fact that the price actions reverse the market, guys. It's the idea of reversing that out. But because of that, that means there's selling pressure now on the sell side for the first time. We haven't seen any sell pressure at any stage here. Buy pressure, buy pressure, buy pressure, buy pressure, buy pressure. No buy pressure. Buy pressure getting rejected, sell pressure. So now your job is to short upticks. That's what we said in the article. Your job is to now be short upticks on gold and take it from there.